concerned should we be about the big multinational industrials here? The group had been on fire, but with everyone suddenly fretting about potential retaliation for President Trump's new steel and aluminum tariffs, the group has lost some of its, let's just call it mojo. Take Emerson Electric, EMR, which I like to think of as a manufacturer's manufacturer. They are and always have been the best at what they do. Emerson's all about industrial automation, fluid handling, tools, and climate control. The stock roared higher last year along with the rest of the group. Then in November, it hit a bit of a snag. Emerson tried and failed to acquire Rockwell Automation. During that whole saga, its own stock got slammed, but it has come roaring back to new all-time highs, much higher than it was when it made that attempted acquisition. And while it lost some of its groove lately, it's only down 4 from its high. The thing is, you have to understand, despite all of the new big picture worries, Emerson's been putting up excellent numbers. Last month, the company reported a strong quarter and raised its full year in sales and earnings forecast. Is that enough to let the stock triumph over a much more challenging stock market? If it weren't for the tariffs, you know what? I think the stock would be at an all-time high. Let's take it with David Farr. He's the chairman and CEO of Emerson Electric. He's also chairman of the National Association of Manufacturers. Get a better sense of how his company's doing and where the economy's headed. Mr. Farr, welcome to Mad Money. Good to see you, David.
Jim,
thank you so much for coming.
Great to see you.
First of all, I'm honored that you come. I think that people have to play, have to understand, I play with an open hand. I've always been in awe of your company from the late Mr. Knight, who we met in the 80s, and just a remarkable company. So I've got to ask you right here, you are having an incredibly strong year. Which divisions are leading?
The automation solutions business, our automation business around the world is very strong right now, particularly strong here in the United States, because all the investment in oil and gas and all the investments we're starting to see around the world. Clearly, the tax plan helped us a lot, the regulation plans, and as you said, the knockback a little bit on the steel tariffs issue, which we'll have to deal with.
Right. Now, do you agree with me that there is a bit of an industrial renaissance in this country? Or I know you've been quoted as saying, look, we're back into where we were from 2002 to 2007.
I think there is. And I think it's very much focused on the Tax Reform Act, the Tax Cuts Act. And it's going to drive investment, which we've had an underinvestment here in the United States for too long. And you've been involved in this industry for a long time, as I have. I've been 36 years, 17 years as CEO. I'm going to give you a couple stats right here. You always talk about our dividend.
Yes.
63 years. So as a CEO, basically raised the dividend about $14 billion. Chuck put out $7 billion. So we put out basically $24 billion in that 63-year time period. And that's a lot of cash for our shareholders.
Well, you just gave me something to cheer about, which is tax reform's and you've been saying you're very vocal. It's been great. Yeah. Do you think that maybe with tax reform, you just have to take the tariffs and that's just part of the package?
It's part of the package. I think we're going to work through it. I think it knocked it back a little bit. We took 3 steps forward, 1 step back. But we're going to work our way through it. I mean, from the standpoint of a cost, they're going to go up a little bit. There'll be a little bit more inflation in the marketplace. But we've done this before. Bush put them in, too. And we worked our way through it. I think the biggest concern is there going to be any retaliation down the road from other companies? And I think this thing's going to be played out. Cutler is a great addition to the president's package right now, because I think Cutler will dampen the president a little bit and try to make him stay focused on how we should deal with this issue.
Well, let's talk about Larry for a second. You can pick up the phone and call Larry anytime. Will you say to him, listen, China, we do a lot. You're on the U.S.-China Business Council. That let's not be too hasty here. China's got some good attributes when it comes to your Chinese numbers are extraordinary.
Correct. We're up like 20% the last quarter. But the issue with China is we know China's been taken advantage of us for years and years and years. Now, I got a great example of what happens in China and the United States. In the United States, we make garbage disposers, Incinerator.
I love mine.
You probably got one.
I do.
So our competitor comes out of China, and we have to sell it into China. It costs us between 10 and 20% tariffs. They sell in the United States, no tariffs. So that's a big issue. So that's something we have to deal with. And I think that in discussions with the president, and I think Larry's the same way, there's got to be a refocus in getting other countries involved and say, China, you've grown up. You're no longer emerging. You've emerged as a global competitor. Let's act like a global competitor and treat everyone fairly.
Now, people have to know you're the chairman of the National Association of Manufacturers. You are not coming on the show and saying, we have got to do great business with China. I wish the president would stop all this.
Yeah, I mean, from my standpoint, the NAM, you have some members that are local. We have 14,000 members, and some members are global nationals, the Emersons, the GEs, the Honeywells, and companies like that. I mean, we have to do business in China. It's our second largest market. It's going to be the second largest market for a long, long time. We've got to do business. Now, I think, as I've told the president, yes, we need to change things. It's just like NAFTA. We need to refine it. all agreements have to be refined. It's just like any agreement you have, you've got to refine it over time. And I think the president understands that. He just has a different tactic. He's got the New Jersey approach to things. I mean, with an iron fist and hit things, and then you try to knock them back in line. In the Midwest, we're a little softer.
Yes, you are.
You're right. Maybe.
Yes, you are. Now, you did an attempt of an acquisition that would have been just dynamite, Rockwell Automation. But okay, but that's now in the past.
Correct.
You did an unbelievable acquisition of Pentair. I met with management, the valve business. That was fantastic. Do you look at the GE where John Flannery said, you know what, we got to make some sales, and say, mouth-watering some opportunities here?
We see some unique assets inside there we'd love to get our hands on. And from the standpoint of, I'm hoping he'll have to eventually raise some cash.
Right.
The Baker Hughes situation, they have to unwind that. I think there's some assets in both cases there I'd like to buy. Right. Nothing really big, but unique assets. And our approach right now, our underlying growth rates can be somewhere around 6-7% this year.
Right.
With the acquisitions, we're going to be 15 to 20% growth. I'd like to figure out how to do some more acquisitions for 2019 and 2020. And that's what I'm looking at right now.
One last question. I've been following you forever. If you were to tell me that things have slowed and you're worried, you would. If you told me that things are good and you're excited, you would. Which is it?
I'm still excited. I see right now we're going to grow this quarter. They're running right now about 7%. Earnings will be up over 20%. I think for the second half of the year we'll be in the 6-7% growth rate, underlying growth rate, and I think our earnings will have a phenomenal year. Tax reform is good. Regulation reform is good. Investments are going. I think there's a huge investment going on in the United States. I got 3 announcements in the United States right now worth about $300 million of investments in U.S. manufacturing. And so I firmly believe the U.S. is going to have a good run here, and that's why you're going to see a lot of European companies come in. It's going to be a good year.
Thank you.
I'm not worried.
It's exhausting on some of these days. Thank you for, and it's not just Midwest optimism, it's empirical optimism. That's what I want. That's David Farr, Chairman and CEO of Emerson Electric. Guys, I need you to look up this company. Emerson has put more money in people's pockets than just about any company that I have ever seen. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.